the real understanding that we are here not as a result of one trade. We're here to play the long game. We're here to play the edge. Trading is a game of probabilities. There's some sayings that I like. One trade should not define your career. One win doesn't define your edge. One loss doesn't define your edge. Trying to think in terms of percentage of your account rather than a fixed capital amount as well, I think helps.
Welcome everyone, hope you're doing fine. In this interview, we talk with Ross Maxwell, a trader with over 23 years of experience in the market, someone who's really knowledgeable of what it takes to make a living trading, work in a institution first, and transition to trading full-time on his own with his own capital and investors' capital. You get to see in this interview how he goes about trading capital from other investors, how he actually manages his drawdowns, and really what it takes to build a mindset of a good trader. We talk about what's the hardest part of becoming a profitable trader, what things you got to maintain over time, what routine you got to keep up, and really big habits that can make a huge difference in your trading journey. That's going to be at the end. So make sure you watch the whole interview, take notes if you want to. And I'll leave below a free training, a free template, because we talk a lot about how to scale up your trading, what things you can do to increase your size, increase your risk over time, also increase your capital, of course. So the resource I use for this, it's called the graduation plan. And I want to give it to you for free because you can actually plan out your whole growth in trading with this and really kind of define what steps you're going to take to move forward and become better. And really kind of set a goal. It's like making your trading a game. So you really set levels and achieve them over time, which is kind of cool. So check it out. It's going to be linked below. Make sure you watch through the whole interview, but also get that free link below. I think to pay, it's going to help you a lot in your journey, I think. So I want to include this here for free. And with that being said, we'll jump in the interview with Ross Maxwell right now. Ross, we had you on the podcast a few months back, or a few years back, I believe. So good to have you back again and looking forward to start training with you again.
Yeah, thanks very much, Etienne. Yeah, it's about a year ago or so, maybe 10 months to a year. So thanks for having me back. Always a pleasure. So thank you.
Let me know what's been going on since we last spoke when you were on the podcast last time.
Yeah, so not sort of like too much, just, ticking away, carrying on with the trading. Had pretty good sort of start to the year this year. I think the volatility, obviously, probably since we last spoke with Donald Trump coming in, a lot of sort of market environment has changed geopolitically and stuff as well, which has created this sort of like high volatility environment, which I'm sure as you're aware, if you know how to trade volatility, it's a good thing for us as traders. So yeah, I think the markets have changed. Myself, not sort of like changed too much. Yeah, just continuing to trade, continuing to educate, and continuing to enjoy the markets.
How do you tend to adapt to volatility increasing? Is it you kind of more fast on triggers, or how do you tend to adjust for that?
I actually think in a way you have to be more patient when there's high volatility, because although there's more opportunities, obviously there's the bigger price movements means you got smaller room for error because the market can run through prices quite quickly. So I think in some ways you need to be a little bit more patient. I think you need to have a higher understanding of sort of like technical analysis. And yeah, just sort of like managing your risk a lot tighter as well, and understanding how you need to adapt your strategy, how you need to adapt to managing your risk to cope with those high volatility environments. So whilst I wouldn't say I'm faster on the trigger, I think it's just making sure that I'm adapting my strategy and adapting my risk to be able to take advantage of the opportunities that come.
Even in the market, of course, for multiple years now, many decades as well. What do you see as the main issues people have when they come to the market these days?
I think the same. I think the main sort of like issues still remain. I think people come in with a bit of an unrealistic expectation of what they can achieve in a short space of time from the markets, and in some ways probably don't show the markets enough respect. The markets have been there for decades. We're trading in a market with professionals, with institutions, banks who spend billions of pounds on edges and stuff like that to create their edge. And it's like, why a lot of people think they can just come in and actually start trading the markets and become profitable very quickly. I think it's a little bit naive, and I think that a lot of that comes from sort of social media these days. The influencers out there that sort of like sell the dream rather than sort of like the realities of trading. So I think that's one of the things is sort of like the expectations. That's one of the biggest challenges is sort of like overcoming the expectations of what can be achieved in a short space of time. I mean, ultimately, it's a skill set that needs to be developed, right? And that takes time. Mistakes are made when you're developing a skill, and mistakes in trading cost you money. So I think that's one of the big things. Mindset, again, it's something that trading itself goes against a lot of us, like a natural human instincts and natural human emotions. Like it threatens a lot of those sort of natural emotions that we will have from trading, and it will expose a lot of that. So again, it's not to sort of sit there and say, you can't do it. It's just being able to train yourself and again adapt yourself and focus on that part of thing. It's not just about sitting at the charts. It's not just about learning a strategy. It goes a bit deeper than that, and understanding that as well. And probably the other thing is undercapitalization. Obviously, we've got sort of like the development of prop firms, which does help with capitalization, especially for sort of retail traders. But I still think that there's sort of, again, it probably comes back to that sort of like realistic expectations of the sort of capital you really need behind you to be able to make the returns that people want, but do it in the right, responsible approach, if you know what I mean, to the markets, and realistic expectations of what can be achieved from that.
If you had to look back at your trading journey, what do you think was the hardest part for you to get to where you are today?
It's a good question, actually. I think that the transition from working in the city, like working in London, working for firms, working for in Hong Kong, to trading for myself, and like the transition from that one, from you know didn't matter what the markets did when I worked for a firm, because I got paid, I got a salary at the end of the month, right? So being able to adjust, and again, this goes back to that sort of mindset and adjusting to what society teaches us, and the expectations, is being able to adjust to an environment where I can't pay myself a set amount per month, or I had to adjust to be able to work out what that set amount per month I was able to pay myself, to be able to cover my bills, to cover my lifestyle that I wanted, and all those sorts of things. So I think that was one of the biggest adjustments. And I think also, I wouldn't say it was a big adjustment, but I had to adjust quite drastically the way that I looked at the markets. When I was working for a firm, I had access to a lot more different information than I did when I was having to decipher the market, make decisions for myself, for my own capital. So I think that in it as well was probably one of the biggest challenges. So a lot of my challenges probably came from that transition from working for a firm to transitioning to becoming an independent trader.
I think that's a good question. How do you decide how much you pay yourself as a trader? Is it based on like the profits you make, a certain split, or do you have like a minimum, or how do you kind of pick that number?
Yeah, so I mean, basically the way that I do it is I have a buffer. Like I have a buffer in terms of like that's sort of separate from my trading account, separate. It's in a buffer so that if my performance doesn't live up to what my edge says it will do, then I have the backdrop of that I can take from, so that it doesn't impact my trading account. It doesn't impact my decision making. I'm not like, oh, I need to make this money, otherwise I'm going to be short. I can go to my buffer and it's like, okay, well now I've got 12 months where if I don't make any money in the markets, then I'm covered for 12 months. And if I'm not making money in the markets for 12 months, then I need to really look at my trading plan, right, and my edge. So that's sort of like one of the things that I do. And then I think the biggest thing, and this sort of takes a little bit of time to develop, I think it's like you need to understand your edge. You need to understand the probability, and you almost work back on worst case scenario in terms of like, okay, so what is my worst case scenario over the course of a year? And then you sort of like try and work that back and pay yourself 12 monthly installments of that. And then if you want to, I mean, again, there's sort of like caveats. If you need to compound a little bit, you need to keep some back, and that sort of side of things. So it's just understanding your edge, knowing what you can pay you. And you know what, if you make more than your sort of like worst case scenario, or what you sort of like deem as an acceptable amount to take from your trading account, then that's your bonus, right? That's your performance bonus at the end of the year. That's the way that I look at it.
Yeah, it's interesting because you don't necessarily know how, if you want to take out all the money that you made in profit to just kind of keep, or if you want to kind of keep more in the account. I know some people are kind of used to keeping more in the account, people are used to like spend a part of that, but finding that balance is definitely a big aspect to it.
Yeah, and I think also you need to sort of like an understanding of leverage and how you can sort of like use that to help to grow, but do it in a responsible way, because obviously leverage, whilst it can sort of like magnify gains and help you make money, it can also magnify the losses and stuff as well on the other side. So I think it's sort of like understanding that and utilizing that to your advantage. And again, Not something that I've had to have done because I was trading before the sort of like the prop firm explosion. But the prop firms, like the traders that I coach and stuff like that, you can utilize the prop firms to be able to sort of like to get that financial backing and stuff as well.
When it comes to capital, do you look at trading only your own capital, or do you look at kind of having more capital from outside?
So yeah, both. So I actually am a funded trader in essence. Like I have backing from other individuals and stuff like that. I am in the process of trying to get funding from an actual fund as well. Going through sort of not like your traditional retail prop firm, but like an actual fund, looking at my strategy and stuff like that. So that's another process that I'm going through at the moment. So and again, it comes back to that capitalization. Like I had a good job in London and Hong Kong when I worked for firms, but again, realizing very quite quickly that even the money that I had from that was not sufficient to be able to produce the returns that I needed to replace that income. So it was looking for funding elsewhere to be able to satisfy that.
So just a quick few seconds here. If you want to scale up your trading and you want to go to that next phase in capital or in risk or in simply kind of building up better habits, you want to check out the first link below. It's going to be going through our what we call the graduation plan, which is a template you can use and fill in actually. So we have a free video training included with it where you can actually fill in this template and plan out your growth in trading. Kind of like making your trading a full video game where you can actually reach levels, you then increase size, increase capital, and really set milestones to your journey in trading. So you want to check it out. You help a lot of people to get profitable so far because they can actually put a timeline into it and really kind of have goals they can achieve and grow it. Thought you might like this free resource, so check it out. It's going to be the first link below. You get the template plus the video training, which is going to guide you through how to fill the template. There's some good stuff coming up, and we'll jump right back into it. Walk me through how you looked for that for the funding, because people might see like prop firm like it's probably the easiest way to do it, but there's a lot of other ways you can do it beyond just prop firms and kind of the online kind of trading capital firms.
Yeah, I mean, look, for me, I was very fortunate that I knew some sort of like very wealthy people from my time in the city and stuff like that. And I came across some very wealthy people through my initial sort of trading journey that when they saw the results that I was getting, they wanted to invest in me and sort of like get a piece of that without having to trade themselves. So I was quite fortunate in that aspect. I've come across other people who get their funding from friends and family. I think that's quite dangerous. You have to have some pretty strong relationships there to be able to do that. And again, cope with it emotionally. If you're getting funding from friends and family, the emotional pressure that adds to you is something else that you have to consider. But I think obviously now, like I say, the access to retail prop firms and stuff helps. And again, it's a bit of a minefield because you have your rogue ones, the ones that are not so good. But if you can find the right prop firms, you do your right due diligence, then it really does help retail traders now get access to that capital that they never had before.
What's the discussion like when you speak with someone who wants to give you capital? Do you have to convince them to give you capital, or do they just kind of want to try it out, or how does that usually go?
To be honest with you, I've never sort of really promoted it. It's sort of like when I got the people approaching me to ask if a couple of the guys were actually they tried to do trading themselves and they weren't very successful at it, or they didn't have the time to invest, and they asked if like I could if I could trade for them. Obviously, you're very tight in terms of regulation and stuff like that, and being able to do it. So it's very you have to be careful. You can't trade for too many people and that sort of thing, and what have you. But so it's not something I advertise at all. It's not something I've approached anyone ever for. It's purely it's been approached for it. Obviously, now that I the fund that I'm working with, I'm looking to get capital from them. I have to provide track records. I have to provide proof of sort of like live trading and live results within their sort of environment before I can get that funding as well. So it's that's another route.
But it's kind of cool how relationship works in trading too. Like the contacts you have and people really matter a lot.
Yeah, exactly. Yeah, 100%, 100%.
When it comes to kind of scaling up and getting more capital, how do you adjust your mindset to that? Do you straight in go with more capital and you just kind of adapt to it, or do you try to kind of scale in progressively, or how does that work out?
Yeah, I think scaling progressively. I think if if you're like plucking numbers out of the air, if you're risking like £100 per trade, and then all of a sudden you want to risk like £10,000 per trade, then you're gonna have some sort of psychological block to that, because again, just from human emotions, we have an attachment to money. So if you look at a pure monetary value, going from £100 to like or even £1,000 or £2,000, you're going to have like this sort of like psychological block. So I think scaling up progressively is always going to be advantageous. But there's things that you can do to sort of like help prepare yourself mentally for it. You know, Again, working on that emotional intelligence, understanding. Again, it's sort of like it goes against that human emotion sort of, or the natural human instincts, but sort of like the real understanding that we are here not as a result of one trade. We're here to play the long game. We're here to play the edge. Trading is a game of probabilities. One. There's some sayings that I like. One trade should not define your career. One win doesn't define your edge. One loss doesn't define your edge. It's sort of like really, once you understand that at a deep level, then actually sort of the rest of it sort of like really does help in terms of or coming to terms with that sort of thing. And again, trying to think in terms of percentage of your account rather than a fixed capital amount as well, I think helps.
What happens when you go through a drawdown or a tough time especially with more capital? Do you tend to like what goes through your mind there?
I mean, to be honest with you, I just have strict limits, right? So I'm not, when it talk, I come across traders and they say they have like I don't know, 2% profit target for the day, 5% profit target for the week. I'm not really a big fan of that. I think you need to have limits for your downside, but when you're running right and the market's running right and your edge is playing out, why are you going to limit your upside? The whole point of trading is to take advantage of your upside and protect your downside, right? So for me, the drawdown periods, it's just I have a quite clear set of rules in my trade plan around drawdown limits. If I hit those limits on a daily, weekly, or monthly basis, I have my protocols to go. I either stop trading, assess my journals, see whether there's something wrong with my process, see something with if there's something wrong with the edge, see if there's something underlying going on in the market which is eroding my edge. And if the answers to those questions are no, you're trading fine and it's just a drawdown, then you just have to carry on, right? And that's it. So I think it's not about necessarily sort of like again, if you reduce risk, you're sort of either letting your emotions dictate your decision making in trading, or you're admitting that your edge isn't there at the moment. Now, if your edge isn't there at the moment, why are you carrying on trading? And also, the point is like, you shouldn't let emotions dictate your trading decisions. So again, it's just about having a clear set of principles, a clear set of rules to deal with those drawdowns. Like it would be irresponsible in a drawdown period to not assess your trading, to make sure that it is just a natural drawdown in your edge. But yeah, I think having those processes and principles in place just helps keep that going.
Do you over time get to know like what conditions are best and worst for your style? Like, do you know when like specific thing happened and it's likely not to work well, or when something else happens it's likely to work better in the future?
Yeah, so again, this comes from data journaling and stuff like that. Like through data and journaling, the times in the markets when maybe. So my style of trading is very much sort of like support and resistance, sort of like trying to understand where the institutional order flow is in the market and trying to identify high probability areas in the market, and then only trade in those areas, right? So it's about trying to understand market behavior. So again, some simple sort of price action stuff like impulsive corrective price action, knowing when you're in a market phase when it's more likely to go through your levels, knowing how strong those levels are, and then also knowing sort of like if the high impact news events are coming up and those sorts of things. So yeah, it's more sort of data driven and sort of like a feel that I've got for the market over the 22, 23 years in the markets that I've been now, and stuff like that. And also understanding when you're switching from a trending phase to a corrective phase, you then adjust your strategy from a more trend-based strategy maybe to a more sort of reversal-based strategy as well.
One of the questions I get a lot is regarding, especially support resistance areas. People are always asking, can you predict if the price actually reverse or go through that zone? Is that something you can do something about? Or is it just kind of purely up to probabilities?
Yeah, and again, that's you've hit a nail on the head there, really, in terms of probabilities, right? Can I predict when it's going to go through or when it's going to hold? Absolutely not. All I can predict, or all I can say, is that my edge shows that a higher probability of a higher probability of times it's going to hold than it's not. And again, like if a level breaks, then that just switches its bias, right? Support becomes resistance, resistance becomes support. Just because something's happened in the markets to break through that level doesn't mean to say that level is no longer valid. You just maybe need to look at that level in a different context, in a different light. There are sort of some characteristics or some sort of like market things that you can sort of understand as to whether that level is higher probability to hold or not. That sort of again comes down to price action, understanding a little bit more about the fundamentals of what's driving the market at that time and stuff as well. That's sort of trying to tie in fundamentals and technicals is a bit more of an advanced concept. I always advise my clients, certainly initially, to try and understand the technicals rather than the fundamentals, because I think it's easier to understand technicals. And I'm also a firm believer that, generally speaking, the fundamentals are communicated to us through the technicals in the charts anyway. So if a level of support is going to break through something, if the fundamental is going to drive something down, it's going to break through a level of support, and that shows us that we should be negative or have a bearish bias. Like, that's translated into the charts. So I think it's easier for people to look and understand technicals than it is fundamentals. But yeah, going back to the original question, there are some sort of like basic things that you can do, but generally speaking, it's just understanding that a level has a higher probability. That doesn't mean to say it's definitely going to hold. It just has a higher probability of holding. And if it doesn't hold, you have your stop loss, you take your loss, and you move on to the next level, which again will play out the edge.
With the current market, we have a lot of like unexpected news coming up. Like we have tweets that kind of change the market directions. Are these kind of things playing for you or playing against you? Like, do they help you? Do they actually match with your support? Or do they kind of go against it sometimes?
Yeah, no, again, so yeah, traders love Donald Trump, right? Creates the volatility of a tweet can move the market. And again, it's the unpredictability of Donald Trump and tweets and certain aspects around the market and stuff at the moment. Again, it's just, does it go against you? Does it go for you? Sometimes it goes against you. Sometimes it goes for you, right? And again, sometimes it goes into something as simple as understanding how close the market is to your price than not. So, if if the market is close to your price and something unexpected happens, then it's probably going to go through the level. Just even if it's like a spike, a liquidity grab, something like that, a stop hunt, it's probably going to happen, and you just have to wear it on the chin. It's part of trading. But there's going to be times when I've got orders in the market which are quite a distance away from from where the market's trading at the moment. Donald Trump sends out a tweet, it spikes up into my level, and all of a sudden I get a really quick win because the level is still the level. The level is still where the liquidity is. So again, it's not necessarily probability. Sometimes it goes for you, sometimes it goes against you. It's about understanding some of the market factors around where price is in relation to your orders, whether and also, like, a lot of these tweets, a lot of this stuff, you have to understand the context behind it as well. And really, is that a massive thing in the markets at the moment, or is it just really short term volatility? Like, as an example, when the I think it was a Japanese prime minister resigned. Was it last week or the week before or something like that? You saw a big spike in yen, but it was like, actually, fundamentally, does that change anything about the yen? It doesn't change anything about the way the Bank of Japan are going to change their policy. Certainly not in the short term. So yes, you're going to see this short-term spike in volatility, but understanding, does that really drive the market, or change the market? Then no. So it's about understanding some things like that as well. And again, that's coming back into sort of understanding the fundamental drivers as well as the technical stuff.
So you're still combining both technicals and fundamentals, or are you really looking only at technicals?
I base my trading decisions in terms of levels and everything like that off technical trading. I think as I've developed, I have a bit more of an understanding of the fundamentals that are driving the market, and probably an understanding of, again, like I say, that if something happened which materially changes the market and what I believe is going to be the direction of the market, then I would probably call orders and wait and see what's going to happen, and stuff like that. But if it's just going to be something and I look at it and I think, yeah, you know what, Donald Trump's just woken up at 4 o'clock in the morning and he's, venting, then, I'm going to use that to my advantage. I'm going to leave my orders and I'm going to say, right, okay, he's probably not going to say anything that's going to fundamentally change the markets at the moment, but he might create volatility that's going to get my orders executed. So, sort of understanding the fundamental drivers, understanding what is a real driver of the market, understanding whether the driver or the thing that is driving that volatility or that price movement is just something short term that's going to be intraday, or whether it's going to be something a little bit more fundamental and long term in terms of changing the actual price and dynamics of that asset. Then yeah, that's sort of probably where I come into an understanding of it.
What's your routine like in terms of trading? Do you tend to do everything in the morning, then you kind of off after that, you leave it and let the trades trigger, or do you tend to be more involved and kind of go back and forth, maybe that is the market thing today?
Yeah, again, that's sort of probably changed as I've developed as a trader. So, when I very first started trading, I was very much more hands-on. I was sort of like watching the screens a lot more, looking for confirmation, looking for patterns, and stuff, which in which case you need to spend more time at the screens. I think as I've developed as a trader, I've got a lot more confidence in my levels. I've got a lot more confidence in terms of my trading, my edge. So I'm much more comfortable with limit orders. So, and it makes things a lot easier for me. I am very big on routine as well. I think not just the routine in terms of your actual trading and sort of having my orders set and going back regularly to check them just to make sure that nothing's materially changed in the market. I think routine just in general is vital for traders, right? Because we have, again this goes to the mindset side of things, but as humans, our brain power only has the ability to make a certain number of decisions a day, right? So if we can make things routine, we can make things subconscious, then it saves our cognitive resources for things that we can't change, things that we can't impact. So when Donald Trump does tweet, we have the cognitive resources to be able to make decisions based on something that we had no control over. But if you've got the routine whereby you whether it, like I'm a big fan of sort of mindfulness and meditation, so I make sure I do that before my trading session. Whether it be I still have a checklist. I tick off every single day that I have to go through certain things every day before I start my trading session, before I enter my orders. But it means that I've almost built this sort of subconscious habit, this subconscious routine that I just go through the motions that I don't need to think about. And when you get into the markets, you don't need to think, is this setup part of my setup? Is this setup part of my trade plan? How much should I be risking on this trade? What is this instrument valid? What time frame should I be trading this on? None of those decisions need to be made anymore because they're all part of your subconscious routine. And then when something unpredictable happens in the market that you can't change or you can't think, then you use your cognitive resources which are fresh and make a more informed decision or a quicker and better decision.
Yeah, it's good to see how preparation matters a lot too. Like you mentioned, you have a checklist of things you have to do every day. I think that's definitely useful. In terms of meditation, how much do you think is needed to be able to see results in trading from it?
I think as it's got to be practiced like consistently, right? I think that's the first message. Is it's got to be, you're not gonna, if nobody's done any sort of like meditation or mindfulness before, you're not gonna feel the effects of it when you do one session. So I think it's like you have to do it for 3 to 6 months consistently, at least sort of like before every single trading session to really start to feel the effects. But I think for me, I actually got into mindfulness and meditation before I became an independent trader. This was back when I actually suffered from sort of like anxiety issues and stuff when I was trading in for a firm in London, and I got into mindfulness and meditation then. And only when I got into became an independent trader did I realize actually it was one of my biggest tools. It's one of the biggest things that could really help me. And it's like I I promote it a lot in my education and a lot to my trading clients, because I think it's huge. And I've had clients literally end decades of losses and become profitable from practicing mindfulness. Like, it's because ultimately what mindfulness can do is it can allow you to reflect and realize that you're not in the right frame of mind to be sitting down in that trading session before you even sit down. So rather than going into that trading session and making the mistakes, you can sit there and realize, actually, I'm more likely to make a mistake in this trading session. And therefore, you know what, I'm just not going to trade today. So it can have that impact. But I think, back to your original question. Sorry, I keep digressing a little bit, but I think it's I would advise sort of minimum of 10 minutes before each trading session. I think 10 minutes is not too much. I think it's an achievable amount. But the impact that it can have and the power that it can have on your trading, if done, as I say, it has to be done consistently over a period of time, can be quite profound.
That's good, definitely. I think we'll leave it at that. It's definitely a good advice there. So tell me how people can find you and kind of what you after this podcast if they want to reach out and learn from you.
So my online education company is called Keyzone Traders. So you can find me at www.keyzonetraders.com. My email address is ross@keyzonetraders.com. I'm going to be talking at the Prop Trading Expo in London on the 27th of September. That's at the Connaught Rooms in Covent Garden. And I'm also going to be talking at the Forex Expo in Dubai. That's over the 6th and 7th of October. And I'm going to be talking on the 7th. So if anyone's there, please do feel free to come up. I'm always open to chat, answer emails, and it'd be great to meet any of your listeners and stuff as well.
Yeah, I appreciate the good work you're doing. I will definitely put those links below. Keyzone Traders, people can check it out and reach out to you there. Hopefully see your speaking thing that could be cool. And we'll hopefully catch up with you soon and discuss trading again.
Lovely stuff. Thanks very much for having me again, Etienne.
There you have it. Hope you like this interview with Ross Maxwell. Really good stuff. I like the last part about meditation and mindfulness. It's something I've been practicing for quite a while too, and I think it makes a huge difference if you want to become better. It reduces your anxiety a lot and just makes you more consistent with what you do on a daily basis. So definitely pay attention to this. If you have any thoughts, make sure you comment below. Let me know the thoughts in the comment section. As always, I'll read all the comments. I'll reply to most of them. And if you want to have a free training to actually set out your own graduation plan, we'd love to call it that, where you set a goal for yourself, a milestone, treat your training like almost a video game, and reach these levels over time, where you can increase your capital, increase your size, increase your risk. Check out the first link below. It's going to be going through that training. You can also get the free template to go along with it. Thought you might find this useful. It really helped me a lot, and I want to share it with you. Of course, you can apply it and just build your own graduation plan. As always, if you're not subscribed, make sure you do it now, so you'll be notified of future interviews we'll post. We have one like this every single week on Sundays, and I'll catch you back here in the next interview or next video pretty soon. Ciao.